Understanding how financial institutions evaluate applications requires looking closely at the major credit reporting agencies, because lenders do not rely on just a single bureau. Experian stands as one of the three primary consumer credit reporting bureaus in the United States, alongside Equifax and TransUnion. When individuals apply for financial products, lenders choose which bureau to pull based on geographic location, internal policies, and specific agreements with credit reporting agencies. Major national banks such as Chase, Bank of America, Wells Fargo, and Citibank regularly pull credit reports and scores from Experian. However, a single bank rarely sticks exclusively to one bureau for every single applicant. Financial institutions frequently rotate or select bureaus depending on where the applicant lives. For instance, a major credit card issuer might pull Experian data for applicants living in certain states, while pulling Equifax or TransUnion for residents in other states. Regional banks and credit unions also tap into Experian data regularly. Local institutions often rely heavily on regional credit distributions, but many integrate Experian into their standard underwriting procedures for auto loans, personal loans, and mortgages. Furthermore, credit card issuers like American Express and Discover frequently pull Experian data for personal and business card applications, depending on the applicant's geographic region. Mortgage lending operates under a slightly different framework. Traditional mortgage underwriting typically requires a tri-merge credit report, which means the lender pulls data and scores from all three major bureaus simultaneously. For these loans, lenders look at Experian, Equifax, and TransUnion data together to determine eligibility, interest rates, and loan terms. Even though newer scoring models are gradually being integrated into the housing market, the foundational practice of checking all three bureaus remains standard across major mortgage lenders. Auto lenders follow a similar pattern to credit card companies. Large national auto finance companies, including captive lenders associated with major automotive manufacturers, often pull Experian credit reports. Because auto financing decisions are heavily automated, lenders often specify a preferred bureau for specific regions or dealership networks. An applicant might find that one dealership pulls Experian while another pulls TransUnion, even when dealing with the exact same financing partner. Business credit applications also interact extensively with Experian, though they often divide personal and commercial profiles. When entrepreneurs apply for small business credit cards or commercial lines of credit, major issuers frequently check the applicant's personal credit score using Experian alongside a commercial credit check. Issuers like Chase, American Express, and U.S. Bank routinely incorporate Experian personal credit data when evaluating business funding requests. Checking which bureau a specific bank pulls before submitting an application can help applicants manage their credit inquiries. While many credit card application comparison platforms and online forums track regional data pulls reported by other consumers, these patterns can shift without notice based on internal bank policy updates. Reviewing personal credit reports across all three major bureaus ensures that any information a bank might access remains accurate and up to date before initiating a formal application.